In March 2012, Ike Batista stood on the cover of a Brazilian magazine with his arms crossed and a smile that didn't ask for your approval, it assumed it. The headline called him the future richest man on earth. He wasn't arguing. Within 18 months, that future had collapsed into one of the most staggering personal financial implosions in recorded history. $34 billion. Gone. Not gradually eroded, not quietly restructured, gone, in the span of roughly 500 days, in full public view, narrated by the very man who had spent years announcing his own greatness through every microphone he could find. This is the story of Ike Batista, OGX Petroleo, and the single dry oil well that cracked the foundation of an empire built on audacity, leverage, and the dangerous belief that confidence and capital are the same thing. Ike Batista was born in 1956 into a family that already understood power. His father, Elisa Batista, was a mining executive who served as Brazil's Minister of Mines and Energy. There was money in Ike's background, a certain facility with resource extraction, a name that opened doors in Brasilia. But he didn't coast on it. He moved to Germany as a young man, sold cars, learned German, absorbed the mechanics of commerce with his hands before he used his head. When he came back to Brazil, he was hungry in a way that inherited wealth rarely produces. His first real strike came in gold. In the 1980s, he developed gold mining operations in the Amazon, physical, brutal work, the kind where the commodity is pulled from the earth at cost, and every ounce means something. He was good at it, genuinely good. He built Mineração Morambai into one of the continent's leading gold producers and earned his first significant fortune before he was 35. But Batista's true genius, if you want to call it that, wasn't geology. It was narrative. He understood before almost anyone in Brazil's business world that the story of an asset could be worth more than the asset itself, that the right investor pitch, the right headline, the right number spoken with enough certainty could move capital as surely as a drilling permit. Through the 1990s and 2000s, he built what he called the X Group, a portfolio of companies each named with an X, each pitched as the dominant future player in its sector. OGX for oil, MMX for iron ore, LLX for logistics and ports, MPX for energy, OSX for offshore equipment. The X, he explained to interviewers with obvious pleasure, was the mathematical symbol for multiplication. Everything in his portfolio was going to multiply. He said this constantly. He believed it completely. By 2010, Brazil believed it too. The country was riding a commodity supercycle. China was buying iron ore as fast as Brazil could ship it. Oil prices were near historic highs. The pre-salt offshore fields discovered along Brazil's coastline in 2007 had convinced the world and the Brazilian government that the country was sitting on one of the great energy reserves of the 21st century. Into this moment, Batista inserted himself and his ex-companies like a man who had been waiting his whole life for the exact right conditions. The market responded. OGX alone, his oil company, reached a market capitalization exceeding $60 billion at its peak. The stock had not yet pumped a single commercial barrel of oil. It was priced on projections, on the reservoir estimates his geologists had made, on the credibility Batista's name carried, on the general euphoria of a Brazil that was preparing to host both the World Cup and the Olympics, and felt, for a moment, genuinely unstoppable. And at the center of all of it was Ike, personally worth $34.5 billion at his peak in early 2012, according to Bloomberg's Billionaires Index, which had just launched and which tracked his net worth with the kind of granular attention usually reserved for sovereign debt. He was the seventh richest person on the planet, the first Latin American to crack the global top 10, and he had no interest in being quiet about it. He told journalists he would surpass Carlos Slim, the Mexican telecom magnate who was then the world's richest man, within a few years. Not hoped to. Would. He tweeted his net worth updates. He gave interviews from his waterfront mansion in Angra dos Reis, a gated paradise on the Costa Verde where the mountains fall into the Atlantic and the air smells like money and salt. He collected cars, a Porsche Carrera GT, a Lamborghini Murcielago, and spoke about them with the specificity of a man who understood that objects are statements. He met with Barack Obama. He hosted royalty. He became Brazil's avatar, its proof of concept, its answer to the old world's old wealth. The Brazilian press called him o X do problema, the X of the problem, a Portuguese idiom meaning the crux of the issue. For a while, they meant it admiringly. But inside OGX, in the quiet spaces between the presentations and the press releases, something wasn't matching. The company's geologists had estimated the Campos Basin offshore fields at enormous volumes, numbers that, if accurate, would have made OGX one of the most significant oil discoveries in the Western Hemisphere. These were prospective resources, not proven reserves. The distinction matters enormously in oil. Prospective resources are what might be there. Proven reserves are what demonstrably is. Investors, caught up in the Batista narrative, treated the former like the latter. When OGX began actually drilling and testing its wells in late 2011 and into 2012, the results were, to use the clinical language of petroleum engineering, disappointing. Well after well came in below expectation. Flow rates were a fraction of what the models had suggested. The reservoirs were present, the oil was there, but it wasn't flowing at commercially viable rates. The rock was tighter than predicted. The pressure was lower. The technical realities that no amount of confidence can override were asserting themselves, quietly, in the data that OGX's executives were reading, and for too long, not fully communicating to the market. In April 2012, Batista sold $154 million worth of OGX shares. He later maintained this was planned portfolio management. Brazilian regulators investigated it as potential insider trading. That investigation would take years to resolve, and the legal questions are complex, but the timing, selling at the peak, months before the catastrophic announcements, was a fact that no one who lost money in OGX would ever forget. The dam broke in June 2012. OGX disclosed that the Tubarão Azul field, its flagship asset, was producing just 5,000 barrels per day. The company had projected 20,000. That is not a rounding error. That is a structural failure of the entire investment thesis. The market didn't pause to reflect. OGX stock dropped 30% in a single session. Then it kept dropping. Not in a straight line, there were rallies, there were optimistic statements, there were moments when Batista himself went on television and insisted that the company had other fields, other prospects, that this was a temporary setback and not a verdict. But the direction of travel was now fixed. Over the following months, as well after well-reported similarly weak results, the accumulated logic of the X group began to invert. The companies were not isolated entities, they were interconnected. OSX, the offshore equipment company, had been built specifically to service OGX. LLX, the port company, was designed to export OGX's oil. MMX depended on logistics infrastructure that was predicated on growth across the X universe. When OGX started dying, it pulled at the threads of everything else. Batista had also taken on enormous personal debt to fund his lifestyle and his continued investments. He had pledged his own OGX shares as collateral for loans. As those shares collapsed in value, the collateral evaporated and the margin calls arrived. He was not just losing the value of his holdings, he was being called upon to cover debts against assets that were no longer worth what he'd borrowed against. The mechanism of leverage, which had amplified his rise, was now compressing his fall at the same velocity in the opposite direction. By the end of 2012, his net worth had fallen to roughly $1 billion, according to Bloomberg, from $34.5 billion to $1 billion in less than a year, a loss of almost $34 billion. It remains one of the fastest distractions of personal wealth in the history of finance. In October 2013, OGX filed for bankruptcy protection. It was the largest corporate debt default in Latin American history at the time, $5.1 billion in outstanding bonds. Retail investors, Brazilian pension funds, international bondholders who had believed the story, all of them took losses. Some lost everything they had put into the company. The workers at the LLX port project in Açu, which had been built at enormous cost in the state of Rio de Janeiro, found themselves employed by a company that had no viable anchor tenant. The economic damage was not abstract. It was measured in jobs, in pension balances, in small investors who had bought OGX shares because Ike Batista was on television telling them this was the future. Batista himself gave an interview in 2013, sitting in a simpler office than anything he had occupied before, looking older and noticeably reduced. He said, and this is a quote, "I made mistakes." He acknowledged the overconfidence. He did not even then fully surrender the belief that he had been betrayed by the geology as much as by his own judgment. There is probably some truth in both. What followed was not quietude. In 2017, Brazilian federal police arrested Ike Batista at his Rio de Janeiro home, the once magnificent property now more notable for what it represented than what it contained. The charges were serious: corruption and money laundering. Investigators alleged that he had paid more than $16 million in bribes to Sergio Cabral, then the governor of Rio de Janeiro state, in exchange for government contracts for his companies. Cabral himself was arrested, convicted, and sentenced to prison for corruption charges that implicated dozens of figures in Brazil's political and business class. Part of the sprawling Lava Jato, or car wash, anti-corruption operation that reshaped the country's political landscape through the late 2010s. Batista was convicted in 2018 of money laundering and bribing Cabral. He was sentenced to 30 years in prison, later reduced on appeal. He contested the charges, as he has contested much of the narrative of his fall. The legal proceedings were lengthy, appealed at multiple stages, and the final chapter of his legal situation was still being written as of the mid-2020s. What is not in dispute is that he was convicted by a Brazilian court of serious crimes, and that those crimes were intertwined with the same period when OGX was burning through investor capital and the X Group was unraveling. The man who had pledged billions to charity, a genuine $1 billion pledge to create a foundation focused on education and the environment, made publicly in 2010, a pledge he said would be fulfilled as his wealth grew, could no longer fund it. The pledge was a statement of intent from a man who believed his fortune would only increase. When the fortune went, so did the mechanism for making good on the commitment. The $1 billion charitable pledge, like so much else in the Batista story, was real in the moment it was made and impossible by the moment it mattered. What do you make of a man like this? He was not a fraud in the simple, cartoonish sense. The oil was real. The geological models were prepared by credentialed professionals using real data. The Brazilian offshore was, and remains, a genuine oil province. Petrobras has gone on to produce billions of barrels from pre-salt fields. Batista was not selling a fiction. He was selling a probability as a certainty, and the distinction turned out to matter more than almost anyone on either side of the trade was willing to examine. He was also, by almost every account, genuinely charismatic, genuinely energetic, genuinely capable of inspiring the people around him to believe in things before the evidence fully supported them. That is a quality that builds companies. It is also a quality that, in the wrong conditions, destroys them, because it creates cultures where bad news travels slowly, where reserve estimates are optimistic by default, where the gap between what the boss has promised and what the engineers are finding gets papered over, month after month, until it can't be. The psychology of invincibility is not unique to Batista. It appears, in various forms, in almost every story of catastrophic financial overreach. What makes the Batista version so specific, so almost uncomfortably legible, is the public nature of the confidence. He didn't just believe privately. He announced it, timestamped it, put it on the record in interviews and tweets and magazine covers. That public confidence was itself a business asset. It attracted capital, it sustained share prices, it gave OGX's bondholders reasons to hold on a little longer. And it made the reckoning, when it came, visible to everyone who had watched the ascent. There is something almost mythological in the shape of it, not in a way that aestheticizes suffering, but in the structural sense, the man who names his empire after multiplication, who promises he will be the richest on earth, who sells the future as if he has already visited it and confirmed it, undone by a hole in the ground that came up empty. All that certainty, all that projection, all that numerological branding with its X for multiplication, and the earth refused to perform. In 2024, Batista was still engaged in legal proceedings, still attempting to rebuild some version of a business life, still, by some accounts, unwilling to be entirely defined by the fall. That refusal to be finished is, depending on how you hold it, either admirable or delusional, perhaps both simultaneously, which is more honest than most clean verdicts about complicated people. What he left behind is a case study that business schools in Brazil and beyond have genuinely used, about the limits of narrative capital, about the difference between a vision and a plan, about the systemic risks of interconnected leverage, about what happens when an entire country's hope gets concentrated in one man's certainty. The wells came up dry, the debt came due, the earth, indifferent as it always is to ambition, simply told the truth. That is the thing about geology. You can tell the story however you want. Eventually, the data speaks for itself.